President Buhari advocates international cooperation to curtail illicit financial flows. NNPC seeks capacity upgrade for indigenous operators. Federal government develops rapid response register for poor Nigerians. Plus, manufacturing sector diminishes for the 5th time in 8 months. This is Business Express reaching you from Abuja, Nigeria's capital. I am Muplang Dakok. Thank you for staying with us. President Muhammadu Buhari says there is a compelling need to strengthen international cooperation in the global effort to curtail the menace of illicit financial flows, as current international instruments are not strong enough to address the menace. The president stated this in a message delivered by Vice President Yemi Osinbajo at the Financial Accountability, Transparency and Integrity Video Conference, FACTI, organized on the sidelines of the ongoing United Nations General Assembly. The president noted that the current international mechanisms for asset recovery are not good enough, as can be seen in the amounts lost to illicit financial flows and the length of time taken before the repatriation of just a small fraction is made. He added that the FACTI panel report can play an important role in bridging the expectations of source and destination countries, as well as in harmonizing the process of asset recovery and return. And the Debt Management Office says the federal government's bonds for the month of September worth 145 billion naira, which were auctioned, were oversubscribed by 215.22 billion naira. The total subscription received from investors for the bonds was 360.22 billion naira, comprising 83.83 billion naira for 12.5% January 2026 bonds, 71.4 billion naira for 12.5 federal government March 2035 bonds, 41.06 billion naira for 9.8% July 2045 bonds, and 163.9 billion naira for 12.98% March 2050 bonds. The DMO stated that successful bids for the 12.5% January 2026, 12.5% March 2035, 9.8% July 2045, and 12.98% March 2050 were allotted at the marginal rates of 6%, 8.52%, 8.9% and 8.94%. The US dollar dipped for a 2-month peak on Friday as renewed hopes of fresh US stimulus eased investors' concerns about its economic recovery, while the Chinese yuan gained after the country was added to a global bond benchmark. Let's see how the naira is exchanging for other international currencies. The Monetary Policy Committee of the Central Bank of Nigeria, at the end of its meeting, voted to reduce MPR, by 100 basis points to 11.5% from 12.5%, retaining the cash reserve ratio and liquidity ratio. What are the implications of the reduction vis-a-vis what the likely impact of federal government's 75 billion naira stimulus as policymakers make frantic efforts to reboot the economy? Well, I have with me a professor of capital market, Uche Uwaleke, who is also a financial analyst. Thank you so much, Prof, for coming on the program.
Thank you very much. It's my pleasure.
Okay, so can you tell us what exactly the economy is expected to show with the new MPR rate?
Okay, first of all, the meeting held this week. It wasn't last week.
Yes, this week. Sorry, not last week.
Yes,
this week.
Monday and Tuesday.
Yes.
So the communique was read on Tuesday, indicating a reduction in the MPR monetary policy rate by 100 basis points. Of course, you know, it used to be 12.5%. It was reduced to 11.5%. And as you know, the monetary policy rate is the rate at which the central bank, you know, lends money to the commercial banks. The intention of reducing the rate is, of course, to, you know, stimulate credit to the real sector. It's expected that that should translate to lower lending rates, you know, by the banks, because if the banks are getting these funds from the central bank at 11.5, of course, there's what is called the asymmetric corridor, which the central bank monetary policy committee also reduced. The monetary policy committee adjusted the asymmetric corridor. It used to be +2 - 5. Okay, it was adjusted to +1 - 7. Now, let me quickly talk about that, the implication of that. +1 means that lending is not done at 11.5, it is done at 11.5 + 1. So the central bank gives it to commercial banks at 12.5. Now, when the commercial banks, if they have a surplus funds and they place with the central bank will pay them interest on the funds, you know, kept with the central bank at the MPR -7. So 11.5 - 7 will give you, I think, 4.5.
So what does that mean for the economy?
Yes, it is meant to.
How can an ordinary Nigerian understand this?
Yes, that's what I'm trying to explain.
Okay.
The intention is to reduce the you know, the rate at which the central bank gives its banks, so that the banks can in turn also reduce the rates they lend money to the members of the public, you know, especially to the real sector. Okay, so that is the intention. Of course, if that happens, if people can get money at you know, cheaper rates, if cost of funds today, you know, for a company, for a firm, if your cost of funds drop, okay, that means you're also expected to reduce the price of what you're doing. Okay, so the real sector is expected to be jump started. As you know, the economy contracted in the second quarter of 2020, and it's also expected that there is another contraction coming up third quarter of 2020. So the expectation is that the central bank hopes to, by this action, you know, support growth, you know, in the economy. But unfortunately, that may not likely happen. That may not likely happen.
Why?
Yes, and that's because most of the time, from what we know, and anytime the MPR is reduced, banks don't usually reciprocate.
That's the problem.
Yes, and that's because banks, you know, will tell you that there are other costs that they incur, that their cost of fund is not just coming from the MPR, but also coming from things like money they spend on running a generator, you know, diesel. So the energy problem is there, insecurity is there. All these are also combining to affect the cost of
so you're
doing
saying that unless
banks.
all these other problems are solved
are
at
tackled
the same time,
yes, this may not really materialize, may not really have any significant impact, you know, on growth, which was why I had expected the MPC not to have reduced the rate. Okay, my expectation was that they should have held the rate because of the spiraling inflation. Inflation, you know, has started climbing up, you know, to a level that is beginning to become worrisome. Inflation rate as of last month was 13.2, and when you reduce the monetary policy rate, which is the benchmark interest rate, it means the real rate, the real return that investors get, you know, becomes negative.
Yes, you mentioned inflation. I was going to ask you.
Yes.
So what do you see happening to inflation, although figures are showing that the inflation is gradually coming down.
It's not.
But
It's not.
this decision,
it can only
what
come
do you
down.
see happening?
Yes, the expectation. People expect that, of course, with the harvest season, because the major problem we're having with inflation rate is the food inflation component. So with the harvest season, maybe it could come down and so on. But of course, you know that the insecurity situation in the country is also affecting the food production in some parts of the country.
Yes.
Okay, and the reduction in this rate now, MPR, will now put more money in the hands of the banks. That's what it means, and that money may go to chase the scarce forex that we have. So the implication of that is that it's likely to put more pressure on the forex market, and if exchange rate rises further, okay, it becomes difficult for manufacturers to import, raw materials, and that will even hurt growth, which is the intention that the central bank, the MPC had by reducing the rate. So overall, I think I was expecting, as I said, for the central bank to have maintained the status quo. Maybe it's in next year we'll maintain status quo and watch as the economy adjusts to some of the interventions that the central bank and government, have made. So the option, for me, would have been for the central bank to concentrate on the developmental things it is already doing, the interventions. Concentrate on
maybe
interventions.
Maybe the central bank wants to watch at the end of the third quarter before, increasing.
No, this is their last meeting for this quarter. The next meeting will be in November. Okay.
Okay.
If they increase in November,
the year, maybe
that
they
will
want
signal that will signal policy inconsistency. You want to reduce this month. Next 2 months, you're also increasing rates. It will signal policy inconsistency, and it may send very wrong signals.
Okay.
So my suggestion,
yes,
okay, is for the central bank to focus on the interventions that, because that one will have more direct impact on the people and on the economy. And they've started well. So far, they told us that they have put in up to 3.5 trillion. The government has been intervening. Central bank is also intervening. So what is important now is to monitor those interventions and ensure that they are actually getting to the right, the beneficiaries.
Okay, we've seen portfolio investment interest in Nigerian stocks.
Yes.
In the last few weeks or even months. Could you say that it is related to the CBN's decision?
A portfolio...
the MPC decision?
Yes, but a portfolio investment, the level of portfolio investment, foreign portfolio investment, that's what it means, yes. Has not received any appreciable impact, okay, for obvious reasons. It's owing to COVID-19. So a lot of investors, foreign investors, are sitting on the fence. They wouldn't want to come to do anything here now because of uncertainty, because of COVID-19. So the people that are actually playing in the market today are domestic investors, okay? Mainly pension funds administrators, mutual funds, and then the retail, institutional and retail investors. They're the ones dominating transactions, in the market, not foreign investors, okay, as we had, in 2019. So the MPR decision, when you reduce rate, as I said, it also scares away investors. Investors can come, particularly in the money market, okay, when they say that the rate of return is something that compensates them for the risk they are taking investing in your economy. And that's also why I'm worried that inflation rate is climbing, because if your return is, if you make an investment that's paying you 10% and inflation rate is 13 point something percent, it's still negative. So as we speak, the return from the stock market, as we speak, year-to-date return is negative about 3.19%. Now, if you add the inflation rate to it, that's 13.2, you now get over 16% loss to an investor. So what matters in investment is the real return, the real rate of return, which adjusts for inflation and not just the absolute value.
Okay, you talked about banks or the impact of the rate for banks. Let's talk about the private sector credit. What do you see happening to private sector credit with this reduced rates?
Yes, I mentioned it before. I said ordinarily, when the central bank reduces the MPR, it should also reflect in reduced lending rates. So private sector credit should increase. That's the intention, really. That's why the central bank reduced the rate. But I've also told you why that may not materialize. So the central bank has been using other unconventional means, or if you like, yes, heterodox measures to do that, and which I think should be intensified. Central bank came up with this loan to deposit ratio that banks must give out at least 65% of their deposits to the real sector. So that measure, okay, has had the effect of increasing credit to the private sector. If you read if you follow the communique, the central bank talked about, the CBN governor talked about increasing credit to the private sector. That is owing in part to the loan to deposit ratio, okay, that you have to give out 65% of your deposits to the real sector. So I think to a large extent that aspect is also is working. And as I also said earlier on, the adjustment in the asymmetric corridor tends to discourage banks from putting their surplus funds with the central bank.
That will in turn
that will
automatically affect.
Yes, it's positive. It's positive for the real sector, because that will also mean banks will have more money to give out to the.
Okay, let me move away a little from the CBN.
Yeah. Or
not completely from the CBN, because with the federal government's 75 billion naira stimulus package, what do you see happening to the economy, even though the MPR has been reduced?
Yes, that is the other ways I would like the government to concentrate on. Okay. The interventions. The 75 billion, no doubt, will be positive for the economy, particularly if it gets to the beneficiaries. I keep saying it, particularly if it is well implemented. And that is why, even from the onset, it's important we set out key performance indicators so that at the end of the day, these interventions can be measured. Okay? If we have put out 3.5 trillion into the economy, we should be able to measure the impact of that 3.5% on the economy. And the only way you can measure that impact is to have key performance indicators, is to put in place adequate monitoring mechanisms, so that at the end of, say, one quarter, a quarter, 3 months, 6 months down the line, you can come back to say, yes, this is the the extent to which what we have put out has what was achieved. So the interventions by the government, very fine. Left to me, but for the constraints, revenue constraints, I would have suggested that the government should also scale up these interventions, because of the huge size of the informal sector we have in the economy, the huge size of the SMEs we have in the economy. Because so far, if you look at the number of companies that have benefited from these interventions, they seem to pale into insignificance if you compare that with the size of yes, no, okay, the size of the SMEs, yes.
Before I let you go, what is the road to economic recovery for Nigeria, very quickly?
Yes, well, that's what I've been talking about here now.
We are talking specifically about the monetary policy, and then we've talked about the interventions.
Yes.
So is there any other way out?
No, those are on the monetary policy side, as I said, the central bank should continue with its development finance function. The interventions, particularly in the agri value chain, because the problem we're having now with inflation is the food. So it's very important that we put money in agriculture, especially mechanized agriculture. On the part of the government too, it's also to also support growth by spending in critical sectors of the economy, particularly those ones that have large employment elasticity, that have the potential to employ as many people as possible, because the high unemployment rate in this country today, of course, is worrisome, and it's detrimental to economic growth.
All right, thank you very much. We've been speaking to Professor Uche Uwaleke. And we'll move on now to oil prices, which rose on Friday, but are on track for a weekly fall because of rising concerns about the global resurgence of coronavirus infections and its effects on fuel demand. What are the current prices of oil and other commodities? The federal government of Nigeria, through the National Social Safety Nets Coordinating Office, says it is developing rapid response register to quickly scale up the enrollment of poor and vulnerable citizens, mainly in the Nigerian urban areas. Minister of Finance, Budget and National Planning Zainab Ahmed, who stated this, added that the poor and vulnerable Nigerians are to potentially benefit from cash transfers to cushion the socio-economic impact of COVID-19 pandemic and to ensure transparency and to mitigate corruption risk. Payment would be made directly to the accounts of individuals using their bank verification numbers, BVN. Now, with the commencement of the registration process for federal government's Micro, Small and Medium Enterprises Survival Fund and guaranteed offtake schemes on the 21st of September, over 174,000 entries have been made. This was disclosed by the Minister of State, Industry, Trade and Investment, Miriam Katagum. Chimobi Walter Naji reports.
The current efforts by the federal government to revive the real sector of the economy by injecting a 75 billion naira MSME survival fund into the sector has no doubt raised expectation among key players. 5 states of Kano, Kaduna, Lagos, Katsina and the FCT are top on the states that have already keyed into the scheme after opening of the portal for registration on the 21st of September.
And in this first tranche, we had targeted those in the education sector. But our observation is other Nigerians have been a bit impatient. So we have, when we looked at the analysis of the sectors, other sectors that were not yet opened had started creeping into this particular registration. So these numbers I've given is not entirely education. We've seen other sectors, I think maybe just out of anxiety.
One of the core responsibilities of the Presidential Committee is to ensure a seamless and transparent process, especially guarding against internet fraudsters and site cloning activities.
Artisans will be getting a one-off 30,000 naira. So this scheme is targeted at 333,000 MSMEs across the country.
What Katsina State also did was they engaged all their local stations to provide information and sensitize the general public. So we call on all the state of the Federation to key into this initiative.
Subsequently, other tracks of the scheme will be opened, starting with hospitality industry on the 25th of September, payroll support and the rest on the 28th of September, while the first tranche of grants to artisans and transport sectors is expected to start on the 1st of October, with 12 states participating.
And on the capital market, the bulls remain dominant in the Nigerian stock market to see it post solid gains at the end of the week. The NSE All-Share Index rose 1.28% and climbed to 26,319.47 basis points as traders exchanged 335.7 million shares valued at 4.2 billion naira in 4,231 deals. Market capitalization stood at 13.7 trillion naira. Banking stocks remained attractive, led by Sterling Bank, Zenith Bank and FBN Holdings. On the global scene, stocks of major Australian banks jumped on Friday as Asia-Pacific markets traded mixed. Bosede Abel takes it up from here.
The re-emergence of COVID-19 pandemic in some parts of the world has continued to hamper on global economy. European stocks were mixed in trading of 25th September as investors continue to monitor coronavirus developments and the prospects of economic recovery. In Asia, Hong Kong-listed shares of China Evergrande Group plunged in a mixed trading day for Asia-Pacific markets. Hang Seng Index was down 0.32% to close at 23,235.42. Shanghai Composite down 0.12% to 3,219.42, while Nikkei rose 0.51% to close at 23,204.62. U.S. stock futures were lower early Friday as the market indices tried to avoid a fourth consecutive week of losses. Futures for the Dow Jones Industrial Average implied an opening loss of more than 50 points, Contrasts tied to the S&P 500 and Nasdaq Composite also traded in positive territory. African stocks were mixed, with Nairobi's All Share and Tunisia's Tunidex posting gains. Bossade Able, Business Express.
And with that report, we've come to the end of this edition of Business Express. Be informed that all previous episodes are available on YouTube on the NTA's channel. You can also communicate with us on Twitter. The handle is @NTA News Now. And don't forget to use the hashtag BizX. Business Express returns Monday at 3 p.m. Until then, make sure you stay safe. I am Muplang Dakok.